delighted actually to have this guest, Valerie Grimba, Director of Global ETF Strategy at RBC Capital Markets. It's great to have you here. Now, we have a lot of people on from various firms who are involved in marketing ETFs, but you're an ETF trader.
Correct.
So tell us about that. What does that consist of?
So I sit on the RBC ETF market making desk, and we're out there all day long posting bids and offers and kind of making the trading of ETFs be able to happen. And the key there is that ETFs, you can create an ETF and you can redeem an ETF, which is kind of the clutch piece of why ETFs are so interesting, and we help facilitate that. Because they are such an interesting beast, and if the underlying stocks in an ETF go to a discount, tell us what you do in that case. Well, then we kind of look at what we think. We've got some models running and technology, and we kind of look at what we think the fair value of these underlying securities should be, and then we kind of step in and have to provide kind of bids where we think it seems fair and reasonable.
And so how do ETFs get created on a daily basis?
Yeah, so same thing. We kind of run a bit of inventory on the back. There's like a minimum unit size, so you kind of have to create a certain amount within the ETF, and then we kind of collect the underlying securities, and when we create, we hand them over to the ETF issuer themselves, and then they issue new shares of an ETF.
That is, as you indicated, the beauty of ETFs. Unlike the old closed-end funds, they could go to a moribund discount.
Correct. This is the biggest selling feature, I think, for the vehicle.
The volume of trading in ETFs in Toronto compared to the volume of trading of stocks, can you give us a ballpark idea what the comparison would be?
Usually, if we kind of look at trading volumes, ETFs are about 10 to 12%. But in periods of volatility, like we've seen over the past few weeks, the trading volume of ETFs picks up substantially, and so we've seen ETFs trade as much as 20% of the overall market volumes is within ETFs right now.
Are they typically a retail product? Can you generalize?
No, I think there's an ETF for everyone. So we see a lot of institutional buying of some of the larger ETFs. Lots of institutions use ETFs on the fixed income side to kind of be able to make tactical trades and kind of add this liquidity piece that they might not get buying individual bonds. And then, of course, there's some products out there that are very retail focused, like the leveraged ETFs, 2x, 3x daily exposure, where we've seen the retail crowd kind of get invested recently.
And of course, people can get burned on those if they think, well, I'm going to hold it for the long term.
Yes, and I mean, we've seen a lot of kind of incineration happen in those funds recently as well.
And in Korea, apparently, people piled into the leveraged ETFs on US techs, and they've been hurt.
Yes, I think there's this kind of like investor muscle memory at work where buying the dip has worked as a strategy kind of since COVID. So I think there's that kind of muscle memory is like, okay, I'll be served well if I can step in and catch the falling knife. But we've had kind of a sustained period of weakness here going on 2-3 weeks. And then it's been a painful knife to catch right now.
So if investors are keen on an ETF in a particular asset class, they'll tend to buy the ETF.
Yes.
And does that lead to the creation of more exchange-traded funds?
Yeah, exactly. That's how we just kind of see AUM within ETFs grow and grow. And so if we're creating ETFs, we count that as an inflow. And if we are redeeming ETFs, selling, that's an outflow.
Can you give us an idea of some of the flows you are seeing into what ETF classes?
Yeah, and so I would say that flows recently have been really a dichotomy. So we have seen this rush into risk on, people trying to find a bottom and get rewarded.
Oh, so they are going into more aggressive ETFs.
They are trying. It hasn't been so successful. So I think we might anticipate the pain is kind of being inflicted now, so they might be pulling back. Because, again, it's been sustained weakness. But then we've also seen, on the other end of the spectrum, a flight to safety, flight to quality, kind of ultra-short duration. Cash ETFs have been seeing a lot of recent inflows, and I think that's just to do with the uncertainty. And so if investors want a place to park their cash, well, they wait it out, and we have a clear trajectory on tariffs and the economic outlook, they'll just wait it out in a cash ETF.
And have you seen Canadian and European investors lightening up on US ETFs and going into their domestic markets?
Yes, it's actually, we've seen the US exceptionalism trade fall off a cliff recently. Canadian investors were buying US equities by a very strong clip last year, $2 billion a month into US equities. So that was just the idea that US is my only place for growth. It's mega cap, it's AI, that's the future. And we've seen ETF flows into US equities just kind of dry up. February, they're $100 million. That's nothing compared to $2 billion. And then they're actually net outflows March to date.
Just finally, obviously, if the Canadian dollar was to rally sharply,
yes,
and okay, we're just looking at cabinet ministers or about to be named cabinet ministers going into Mark Carney's swearing-in ceremony, and there's Chrystia Freeland. Going to be interesting to see if she accepts transport. Anyway, let's get back to you, Valerie. Sorry about that. So if the Canadian dollar shoots up, obviously it's going to be painful to hold U.S. stocks in an ETF, but there are all kinds of hedge solutions.
Yes, this is kind of, again, the beauty of an ETF is that you can embed currency hedge within the ETF holding itself. So there are over 350 Canadian dollar hedged ETFs in the Canadian market. So right now, if you think the Canadian dollar is going to kind of have some mean reversion and strengthen against the U.S. dollar, then it might be a prudent time to look at a CAD-hedged solution for your foreign equity investments.
We better leave it there. Thanks very much indeed for joining us.
Thank you very much.
Valerie Grimba is Director Global